We have the French and South Korean elections behind us, retail sales, and a possible rate hike in front. But next to me is Stephen Guilfoyle, president of Sarge 986, to talk about it. So let's welcome him to the show. Stephen, thanks for joining me.
Thank you, Olivia.
Well, there's been a lot of interest in markets outside of the U.S., so I'd like to start there, if that's okay. Today, President Trump met with Russia's Foreign Minister Lavrov to talk about policy, as there's been a lot of tension around Syria, and now Turkey's mad at us for supporting Kurdish forces. Meanwhile, investors have been pouring their money into emerging markets. Do you agree with this logic?
Well, outside of the U.S., economies are growing faster than they are here in the U.S. What do we have in the first quarter? 0.7%, something like that for the GDP. Of course, business inventories were revised higher for March, so there probably will be an upward revision to that GDP. But still, European economies, Asian economies, Latin America, they're all growing a little faster than we are. And most multinational U.S. corporations are, say, 40 to 45% exposed to the international, which is why the S&P 500 and the Dow are outperforming the Russell 2000 this year, which is really U.S.-centric and performs better in a strong dollar environment where the U.S. is outperforming others. So I'm not surprised by this. In fact, I've modeled my own portfolio that way, really sticking to corporations that have that kind of exposure elsewhere.
Okay, so Sarge, in turn, what are some obsolete trades you're seeing then?
Obsolete trades?
Yes.
Well, let's say a Russell 2000 ETF or so would be somewhere. I wouldn't say it's obsolete. The Russell's still up 2 to 3% this year, but you're already getting 7 to 8% on the S&P 500. So it's not an obsolete trade, but something U.S.-centric would not perform as well as somewhere where you get more exposure.
Okay, well, like you said, the economic environment here is fairly lackluster, which in turn has supported non-cyclical stocks like tech, which is why we're seeing the NASDAQ lethargically hit record highs. So how do you feel about the overall tech sector in relation to where this economy is going?
Well, myself, I'm long Seagate, which is kind of a tough one. I'm long Intel, I'm long Apple, I'm long Amazon, well, that's kind of a retail play also. I like tech. Tech has been a leader for years and years. It's where innovation happens. It's also where a lot of the money is that is overseas if we ever do get that tax reform package that we're all hoping and praying for, but seems yet so far away, maybe a bridge too far. As long as we do get that, or at least the hope is there that we get a repatriation at some point, well then there's going to be a lot of money that comes home at a low tax rate for these mostly tech corporations, and they're going to either spend it on buybacks, on research and development, on dividends. It's going to be a reason to own these stocks, which is why you're seeing elevated values.
Okay, well, now that we covered tech, I'd like to finish up with retail, since we have retail sales this Friday. What's going to be a game changer for investors that want to get in or out of this environment, whether it's earnings, we have Macy's and Kohl's tomorrow, or M&As?
Well, retail is expected to be awful. So if it's not that awful, it might be perceived as good. I'm going into the retail earnings season long Kohl's and long Walmart. Those are my favorites in the space. Kohl's, not because they're knocking the door down, but because they're going to be leasing out the space within their stores to smaller, less successful retailers, therefore making use of their own underutilized space, which I think is a great idea for revenue creation. And Walmart, because they are taking on Amazon in a huge way. I mean, they got this store number 8, which is really an internet incubator. They're spending a lot of money in the space. They have this great idea, I think, where I've already said I'm long Amazon, so I'm long both, but I'm kind of rooting for Walmart, where they're going to, if you order something online, you can either get the full price and have it delivered to your house or get a discount and go to the store and pick it up, which is something that Amazon can't compete with because they don't have stores. So I think that Walmart is being creative and is taking the bull by the horns, and you've seen it in the stock price. While the rest of the retail sector was getting the stuff knocked out of them over the last couple of months, Walmart's been going higher. Walmart's up about 10% since the low point earlier this year.
Well, that's great. I noticed that when I was shopping the other day for something, I thought I was on Amazon, but I was really on Walmart, and it was a really great experience. So thank you so much for the tips from Stephen Guilfoyle. We are lucky. We will look out for those retail earnings. And thanks so much for jumping on cam with us today.
Anytime. Thank you.